All right. Well, while everybody is on their way in, since Christmas is right around the corner, and whether you celebrate Christmas or not, you probably at least have some good food in. So maybe I'll ask you guys what your favorite kind of Christmas dish is or holiday dish. Mark, what's yours?
I'm going to go non-traditional. I'm going to go hill country Christmas with brisket and maybe some quail and some mushrooms.
That sounds amazing. I love it.
Carnivore delight.
Yeah, that's fantastic. Rob, what about you?
Oh, quinoa and Brussels sprouts and no, I was just making up vegetarian fare just to counteract that testosterone platter. I'm a dessert guy. Anything with you know, dessert,
Anything
pumpkin pie.
dessert. Okay. Pumpkin
Yeah.
pie? That's your
Well, I don't know what I'm going to make for Monday.
okay.
Um, Went to a dinner party last night or had a dinner party and made apple cranberry pies. Apple pies with cranberries. Very, very good.
Apple pie with cranberry. That sounds delicious. Femi
Yeah.
said eggnog and bourbon. That actually sounds fantastic, Femi. In fact, those that know me well know that my husband likes to think that he's a bartender. And so when when it's Christmas time, we do the 12 days of cocktails, and he creates a different cocktail each evening. And the one he made last night, Femi, you're going to enjoy this, and I'll send you the recipe if you'd like. It's a smoked apple cider old fashioned. And it was ridiculously good. So if you want the recipe, Femi, just send me a note and I'll send it over to you. No, Ira, it was not a 12 days of TMC session, although we could have kind of a special um, a special segment that's just on kind of favorite holiday recipes for everybody. Or maybe we just share that in our message boards or something. But anyways, all right. I'll send out recipes. Just send me an email if you want it. I've got lots of things happening in the chat. So send me an email and I'll send it over to you. I'd be happy to.
I
All right.
think
Well,
I think people would probably rather talk about your cocktails than, GSE buybacks.
yeah, that's probably right. Although maybe one has led to the other. We'll
Yeah.
we'll go ahead and get things kicked off. Hello everybody. Thanks for joining us. Happy Friday. If y'all are not subscribed to our YouTube channel or our podcast network, please do. We'd love to connect with you there. And that way, if you missed an episode, if you're traveling for the holidays, for example, you can always pull it up while you are out. I'm Melissa Langdale. I'm the president and COO of the Mortgage Collaborative, as always, joined by the incredible Rob Chrisman. And this week, our very, very special guest, Marc Perez, who is the Chief Strategy Officer at Southwest Funding. Welcome, Marc.
Hi, how's everybody doing?
Good, good. And Southwest Funding, you guys are just like 2 hours-ish from me. I'm in Austin. You guys are up in Dallas. So we're Texas heavy here today, Rob.
2 hours. How fast do you drive?
Well, I told you I lived kind of up in the hill country, so maybe does that make a difference?
I
I
don't
do
know.
I do drive relatively fast.
I always thought it was 3 or 3.5.
No, no, it doesn't take that long.
Um,
Maybe depends on where you're going in Dallas, but every time I've been, it's about two.
do you stop at that gas station about halfway? Was it West Texas where they have
The Bucky's.
No,
no,
he's
the
the Czech place.
yeah, Czechoslovakian pastries,
Yeah.
kolaches or something, or
Kolaches. I have never stopped there. Now I'm gonna have to go find out where that is.
Mark will send you the link to the gas station that, right? I mean, Mark, it's a thing, right?
Oh, absolutely. You
all right.
definitely have to stop in West and experience the kolaches there. It's just it's this little no-name town, all seemingly just pops up, and you go there and you can get gas and you can get pastries and kolaches and all kinds of neat Czech stuff there. So
Okay, so I have a question about kolaches because I literally have never heard of them before coming to Texas. And and I promise we're going to talk about mortgage eventually. But I have seen like two different versions of kolaches. One is like more sweet pastry, and the other one has like a sausage in it or like a hot dog in it. What is the right
Well,
version of a kolache?
so, sweet or, savory, take your pick, right?
mhm.
Yeah. Is it just the pastry and you can kind of put whatever you want with it?
The ones I've had are the ones with the sausage in there. I haven't seen the ones with the dessert. I'm not saying they don't have them there, but those are usually the more common ones. I think the other terminology I've heard is the pigs in a blanket. So
Yeah,
yeah,
we've had that. All right. All right. I officially know more about kolaches than I did before. So thank you.
all right.
And I have a new place to stop on the way to Dallas. All right. Well, let's go ahead and kick things off. Last week we did talk
Yeah.
about what
Given your speed, like the parachute will come out of your car as you approach the west exit. Uh, so yeah, if you can slow down.
I'll do my best to slow down. I do
Yeah.
like puppies. Ken is commenting. Although every time, the last couple times that I went, it's been like a holiday weekend, and it was ridiculous. It was like a Disney line to get to the bathroom, and we left. It was too overwhelming. But it's
Where's that?
Bucky's.
Oh,
Yeah,
uh,
yeah. It's like a Walmart, Cracker Barrel, and Texas
Exxon.
barbecue gas station, like all merged together. Yeah, exactly. It's Walmart, Costco, and a gas station. Yeah. All right. We do have to talk about mortgage eventually, although I think allowed a little freedom because it's Christmas, right?
That's right.
So I will argue that this is a perfect lead into mortgages because you have in the history of product development, people and companies taking the same thing and making them new or making them interesting. Gas, and then convenience stores became attached to gas stations. So then you could do that. And now Bucky's is a thing.
Yeah.
Well, aren't they selling the same, you know, Doritos and unleaded that everybody else is selling? But yet people have Bucky shirts, there's Bucky sweatshirts. It's a thing.
It's a thing. It's a culture. It's the craziest thing to me. It's because their brisket is actually fairly good. Um,
Okay. But
yeah.
you have mortgage companies out there offering mortgages
Yeah.
that, they can do things with. Kind of the same old mortgage, but different companies have different cultures, have different product offerings, different appeal to consumer, and so on.
Yeah.
All right, I'm done.
That's a really good segue.
Yeah.
I love it. All right, well, we'll get on to what we had originally planned to talk about today, which, if you were with us last week, we talked about kind of the 12 things you need to know to do more in 2024. Today, we're going to do a little bit of a reflection on the past year and some of the biggest mortgage events that have happened. And so we're going to talk about the 12 big mortgage events from 2023. Let's start, Marc, maybe with you on the NAR lawsuits. Obviously, that was it's had a lot of headlines recently. Has kind of taken on a little bit of a life of its own. But I'd love to hear from you and what you're hearing from your loan officers as they're kind of out there in the markets. What's this? What's the sentiment with customers? What's the sentiment with your sales team on it?
Yeah, absolutely. So for those that aren't familiar, on Halloween this year, a jury in a Missouri federal court issued a verdict finding the National Association of Realtors, or NAR, and two very prominent real estate brokerages being liable for, I think it was approximately 1.8 billion in damages for what plaintiffs characterized as participating in a conspiracy to inflate realtor commissions. Allegations stemmed in part from an NAR rule that required realtors to offer compensation to buyer agents in order to list the property on MLS. Notably, this is one of several pending class action lawsuits, i.e. your copycat cases. So the question becomes, why should mortgage lenders care? There's a couple of extreme cases, right? So the first one that, a lot of our loan officers kind of screamed about a little bit, but not really, is will compensation rules get structured in the realtor world so that the borrower ends up having to pay the realtor? That's probably the worst case scenario for a loan officer. I personally don't think that's going to happen. Let me back up. I don't think any major changes are going to happen anytime soon. I think everything's going to digest a little bit. As far as governing entities that are going to create rules, the only thing I can think of is maybe the DOJ. But even then, the DOJ, I think we're a long ways away from seeing anything that happens there. I mean, really, just in simple terms, the business with the realtors or these real estate brokerages is a lot of it was just I felt like it was just understood that they had a 6% commission, and that they were going to cut it the way they were going to, but it was never actually communicated. So that in itself could be a remedy, right? The remedy is, hey, we just need to effectively be able to communicate more. There's a couple of other theories that saying, hey, if you structure it differently, is it going to impact home sale prices? Because the home sale prices were initially being adjusted so you can account for the 6% commission that was in play. I personally am not a big believer in that. I think that people are going to pay for whatever they're going to pay. So those are my thoughts. Kind of on the NAR lawsuits.
Rob, what are you hearing from your lender friends?
Well, I mean, I was actually going to ask Mark, if I'm running a an AMC or a credit reporting agency, why do I even care about this NAR lawsuit? And it made a big splash on Halloween and then in the subsequent weeks, but things have really quieted down. Obviously, it's going to grind its way along. I know, for example, that Redfin left the National Association of Realtors a month or two before the verdict. I think that initially people were excited. Oh boy, the big bad NAR. Gee, we have to capitalize realtor every time we type it out, kind of thing. They deserve their comeuppance. But then others said, well, wait a minute, if you're a family that's saved for years and years, saved up a down payment, and now lo and behold, you've got to pay an additional 3% because you're paying for somebody to represent you in the biggest purchase of your life, something you may have never done before, and you don't know what's going on. So you're not going to not want somebody on your side helping you. But to ask that family to save up even more to pay for the commission is very tough. So there was this initial excitement, and then people said, well, wait a minute, what might this mean? Mm-hmm. Right now, it really doesn't mean anything because it's going to take a while to happen, but it certainly caused a big hoopla when it was initially announced. It may, I will always argue that the lending industry is very good at overcoming speed bumps, whether it's Dodd-Frank or TRID or CFPB or new 1003 or, loan level price adjustment, whatever it is, we kind of motor along. I would imagine the realtors are the same way, and, we'll figure something out. But you'd hate to see a hit to property prices because that family of with the first-time home buyers, they can't quite get there, and so prices drop because of that. I don't think that's going to happen, but we'll see. Time will tell, right?
Yeah, I agree.
Yep.
Well, our second kind of big event of 2023 really has to do with the market and the Fed funds rate. We've, had 4 increases, but it's really been holding steady since July. Rob, obviously there's been a shift in kind of sentiment with the Fed over the last few months. And there's lots of predictions coming into 2024 as a result, but would love to kind of hear your thoughts on, the significance of this in the marketplace over the year.
Well, maybe Mark's better suited to answer this question. He's the one with the MBS prices on the screens
I
behind
know,
him.
I see that.
Um, I personally think rates are a little bit ahead of themselves now. We moved up. We hit a high around 5% in October on the 10-year Treasury, for lack of a better index right now. But so we shot up there in October, and then we're kind of waffling along. And then the last week or two, because of the last Fed meeting, we've come down dramatically. And so suddenly everybody's dealing with renegotiations and pricing, and why aren't you following the market, and so forth. And everyone's interested in interest rates again. But the Fed, has been fairly consistent up until this last message by Jerome Powell. The Fed has been relatively consistent. Here's our target inflation. We're going to keep raising rates until things slow down. I mean, the message has been clear, and you don't want to fight the Fed. So this last announcement by Jerome Powell, I think, is what caused all the volatility and for rates to come down. And I think maybe it's going to take a while for rates to kind of hover around these areas, because, the Fed may not do anything. And the bias is towards them easing at some point, but it may not happen till March or April or May. And so we could just waffle around these rate levels until then. So, I don't know, Mark, what are you hearing?
Yeah, I mean, you look at Fed funds futures, and you see the lines. One of my favorite tools I like to look at is the CME rate tool, rate tool watch. If you type in CME on a Google search engine, gives you the percentage of probability. It's based on Fed funds futures. I think everybody's drinking the Kool-Aid that we're going to go, and we're going to, we're going to see some rate cuts that are going to be happening in there. At the same time, you've got the good old dot plot that's in there. That's kind of giving you a little bit of, I guess, prediction. Thing with the dot plots, though, is I take them with a grain of salt. I'm not 100% invested in their accuracy, because there's been a lot of bias out there for now. So technically, the dot plots is supposed to be based on individual, independent, not coordinated assessments. So in theory, it shouldn't be a manipulative tool. But oddly enough, and just think about this, and this in 2 cents, could give you nothing. Oddly enough, there's up to 19 policymakers, 7 governors on the Fed board in Washington, and the presidents of the 12 regional banks that can contribute. So just kind of think about that. But the other thing is, it is going to be an election year, right? So politicians are wanting to come in and make things look good, make things look a little bit rosy. There's obviously in our business, there's clear advantage to seeing a lower rate trend, right? And so we all want that, because we all want, the business to roll in. So having said all that, we do trade using some of these tools in the markets. And so nevertheless, I don't want to discount that or say they're no good. I would just be very watchful, is really what I'm saying. But I do think we're definitely going to see lower in 2024, and I think it's going to be good for our business.
Yeah, I don't think, I've said this before on the show, Melissa, I've never met a loan officer who is going to base their livelihood on somebody else's interest rate predictions, or even their own interest rate predictions.
Yeah.
Or B, a loan officer who's going to tell a borrower, a live lead, hey, you know what? Come back in 3 months. I think rates are going to be lower. You know, you just don't,
Right.
just not, it just doesn't come out of their mouth.
No.
And
Right.
so now, of course, we are dealing with, in fact, somebody, a broker today just sent me a letter that he received from a very large wholesale organization which will remain nameless, but generally goes by their letters. Anyway, uh, uh, early payoff penalty. You know, prepayment penalty or early payoff penalties are back.
Yeah.
And these loans that lenders were doing at 7.75% or 8% or even higher, 8.25%,
Yep.
now are quote refinanceable. And even if you're not going to refinance them, probably somebody else is. And so we are dealing with penalties.
Yep.
And you know, companies are going to have to deal with that. So much of the year we were dealing with buybacks from the GSEs, and now because of this downward move in rates, we're dealing with early payoff issues. And when you talk to anybody in capital markets, they kind of care, but they kind of don't care. All they want is a lack of volatility. They don't want that, and they don't want that, or they don't want that. And so when you get volatility or sudden moves up or down, that creates problems for capital markets people, whether it's extensions or renegotiations. And in this case, it's renegotiations and early payoff issues. And I think we're going to be dealing with that. And generally, I see the question there from Jim about who pays for that. So I'm not an attorney, though I play one on TV, right? Yeah,
Stayed in the Holiday Room last night.
I'd probably, usually it's spelled out in whatever agreement. You know, if you're a loan officer working for a company, or an independent mortgage bank or a bank, you have some kind of employment agreement, and it's probably spelled out in that. It's certainly spelled out in the agreements that say Southwest Funding or, Fairway or, Movement Mortgage have with their investors in terms of early payoffs.
Yep.
And, whether it's 3 months or 6 months. And typically, if the investor goes back to the lender and says, hey, this loan paid off, we want whatever it is. Maybe it's the premium above par, maybe it's some kind of penalty, whatever it is. The lender is, once again, it depends on the agreement that they have with the particular loan officer. Oftentimes, and Mark, correct me if I'm wrong, but oftentimes the loan officer may not be at fault. I do a loan for Melissa, and then you come in and refinance it, and I didn't even know Melissa's loan was being refinanced,
Yeah.
and suddenly my company's being hit by from AmeriHome or PennyMac or somebody.
Yep.
Or whoever, hey, pay this penalty. And I'm like, I didn't have anything to do with it.
Yep.
So
it's very, very
yeah.
common. And y'all just naturally segued actually into our number 3, which was the rate relief we've seen recently and some of the impacts on that from an EPO perspective. So we already talked about number 3. We'll jump on to number 4, and really we've had a lot of discussion throughout the year around trigger leads. It's been a hot topic for a lot of our lenders at the Mortgage Collaborative. There was some legislation actually, kind of brought to the House in April. And then another one that was just brought recently, but really not a lot of movement has happened in that space. And, our lenders oftentimes are telling us stories of customers getting hundreds of calls from, from companies that are buying their kind of trigger leads. And so it's definitely been a hot topic for our world, but would love to know kind of Mark, maybe, and Rob, your thoughts on the impact that this has had in your space, and or if you want to make a prediction and say if anything, if any of the existing bills that are out there will make any headway in the coming year, that would be great too.
Certainly a lot of people are against trigger leads. I haven't heard of a number above 100 in terms of borrowers being called, but certainly it exists. The NBA has come out. The NBA, I believe, has listened to its members and come out, in favor of something limiting these trigger leads. But the NBA, I'm sure, also has members that buy trigger leads.
Yep.
And so the NBA kind of has one foot in, in two different, a foot in two different canoes
Yeah.
going down a river, and they don't know which canoe to jump into. I think they've sided with, putting a limit on trigger leads. So I see that happening in 2024. Mark, do you have any thoughts?
Yeah, I mean, really, it's like a fork in the road, right? So critics are going to argue trigger leads can lead to harassment, deceptive offers. And then the other school of thought's going to be there that you can offer the customers access to better mortgage deals. We're in a capitalist society, so if you can give them a better deal, let's give them a better deal. So, honestly, from the consumer standpoint, it can feel a little bit overwhelming and a little aggressive when you're getting a ton of calls and you're working with your loan officer that has had this relationship with this borrower. They've been working on their credit. They've been talking to them for months, and they're having these intimate discussions, having some coffee, but at the same time, you're getting all these like harassment calls that are just kind of coming in. So, in my opinion, I think it's good that you have some rules and some governance to put that, but then at the same time, the spirit of capitalism. If you have a better deal, all of us are hungry, right? We're all in the business to do mortgages and to originate and do as many loans as we can. So, that's really the principle. So.
Yeah, this is a hard one just for all the reasons that you said, right? There, there are some things that could benefit consumers, but there are, it can get confusing for consumers too with that many phone calls coming at the same time. So, there's kind of pluses and minuses with it for sure. All right, so I'm going to roll in because we're almost out of time. I'm going to roll in 5 and 6, and we're just going to cut it off at 6 today. Even though y'all are going to have to trust me. I got 6 more big things that happened in 2023. We at 5 and 6 really have to deal with inventory and affordability. These have been big topics really all year long. Obviously, the housing market has really remain relatively strong as a result of inventory being so low. It's held prices up in most markets, but it also has been a challenge for affordability. And we've had a lot of discussions in the Mortgage Collaborative recently around condo guidelines and how condos could be a great solution for affordable housing products, but their guidelines are, it's very difficult to get a condo to go through the process right now. Marc, what are you hearing on your side?
Well, definitely inventory is low, and a lot of that's predicated by the fact that during COVID, we had such low rates. So a lot of borrowers have these rates and they don't want to let go of them. Think back to basic economic principles. They'll basically tell us lowering demand will lead to lower prices. So a mortgage rate jump could actually be a blessing in disguise. I think in this environment, cash out refi potential is definitely a thing. According to bankrate.com, credit card is at an all-time high. A lot of Americans are using credit cards to finance their lifestyles. And so as rates are steadily going lower, this is going to be a great opportunity to take out a cash out refi and pay some of those credit card debts that you have. A lot of Americans are feeling the pinch. If you just look around your neighborhoods, at your average Joe's, there's a lot of guys that are working Uber, they're working at fast foods or Walmart on the side so that they can make money, but at the same time, they're they're really skyrocketing their credit card debt. So as far as like the home affordability challenge and things like that, I think one of the big deals that makes things expensive, a lot of our LOs are afraid to charge borrowers for services they provide. They want to pad in the charges into the rate, which makes it more expensive and sometimes unattainable. So I would just advise that you should charge for your service up front and ask for seller concessions. With condos, HOAs have been really aggressive over the last several years. So you've got to just evaluate, is the home insurance and the taxes being lower, is that going to be worth it with elevated HOA fees? You just kind of have to make a decision on your own. What do you think, Rob?
You summed it up. I mean, you did. No, I don't. I'm good on that.
All right. Well, we are right up at time. Marc, thank you so much for joining us. I really appreciate you and you sharing your insights with everybody here. Thank you, Rob, as always, for joining us. And thanks everybody that's here. Hope everybody has a very Merry Christmas next week. And we will have a rundown next week as well. We're gonna kind of talk about what's ahead in 2024 with PRMG's Kevin Peranio. So we'll look forward to seeing you guys next week. Have a good one, everybody. Merry Christmas.
Thank you, guys. Bye.
Thanks, Mark. Thanks, Melissa.